Hey, what's going on, family? Welcome back. And if you are new here, welcome to the family. It's everybody's favorite uncle, cousin, Tyrone Gregory, back at it again. Excited about today's video as I have been asked a lot of questions, both online and in person, to kind of get some clarification about this. And what I'm referring to, just so you won't be killing yourself out of curiosity there, is Bitcoin and taxes. Yes, today's video is all about the crypto. So I am going to be brave enough to go ahead and dive deep down this rabbit hole. And I'm sure that I'll be able to answer at least 90% of the questions that's been burning in your brain when it comes to Bitcoin and taxes based on what the IRS has provided us thus far. So let's go ahead, jump right into it, starting right now, I guess, starting now with today's video. And here we are, Bitcoin and taxes. An introductory how-to conversation about cryptocurrency and taxation. So let's begin our discussion with the most popular question. What exactly is Bitcoin? Now, for all my cryptocurrency millionaires and Bitcoin billionaires out there and all my mining experts in the field, I know that you already know what Bitcoin is. But for those of us who are new and got fresh skin in the game, let me go ahead and kind of break it down. So for my experts, just consider this like a recap, or you could just skip ahead a few minutes to get to the actual breakdown. So Bitcoin is a type of cryptocurrency. And I emphasize on the word type. Okay, and you'll see why later in the video. But cryptocurrency gets its name from the fact that it uses cryptography to secure the financial transactions that take place. Therefore, knowing that, cryptocurrency is either going to be considered a digital currency or a digital asset. So knowing that it's both of those two, the next logical thing I want to answer, or the next question I want to answer is, well, exactly how many types of cryptocurrencies are there? Well, from my understanding, there are lots of them. As a matter of fact, as of the recording of this video, there is close to 1,300 types of cryptocurrencies out there. Also, to my understanding, you can create your own cryptocurrency and have it released to the public. Yes, I said it. If you wanted to, you could create your own cryptocurrency and put it out there. The same as companies do with stock, but as opposed to having an IPO, you would have an ICO. ICO standing for initial coin offering. So again, knowing that I know I said that, there's close to maybe 1,300 types of cryptocurrencies out there, but based on the fact that you can create your own cryptocurrency and have it out there, I'm sure that in the near future, we'll probably have a lot more. But regardless of however many types of cryptocurrencies is out there, the main two that you want to worry about is Bitcoin, which is the most popular. And Bitcoin was created back in 2009 by the mystery man Satoshi Nakamoto, in which nobody knows whether that's a single person or a group of people. We don't know, war against the machine. That's what it is. Secondary, the next one is considered the altcoin. And the altcoin is any other coin besides Bitcoin. And there are a lot of altcoins. Remember, it's either going to be a Bitcoin or an altcoin. And this is where those masses come in, because as an altcoin, you have the Ethereum, the Litecoin, the Ripple, the Dash, the Neo, the Lisk, the sting, and I'm sure by it being in all caps, that probably stands for something else, but that is the term for that type of altcoin. And then there's the Dogecoin, and trust me, the list goes on. Lots of them out there. So with all these coins out there that we can invest in and profit from, the next question I want to try to answer is, how does the IRS view Bitcoin and cryptocurrency? You know, ever since 2009, when Bitcoin and cryptocurrency first hit the market, nobody knew anything. The truth be told, we really still don't know nothing today. The only thing we knew is that you can use this new form of currency to purchase goods and services and also invest in it for cash. And as tax professionals, of course, the first thing that came to our mind was, well, how is this going to be taxed? So 5 years later, back in 2014, the IRS decides to give us some sort of guidance as to how U.S. citizens can actually deal with and actually prepare themselves for taxation when it comes to Bitcoin. They released to the public what is called Notice 2014-21. And I'm going to pull it up now and just kind of read some things with you. All right, so here we are looking at Notice 2014-21. As you can see here at the top, it's about 6 pages long. We're really not going to go through all 6 pages. We want to kind of show it to you there. If you really want to look at it yourself, I'll put the link to it in the website. You go download it directly as a PDF from the IRS. I'll make sure that it is in the description there. But as we can see here, as I kind of go through it, that it says that virtual currency is a digital representation. I know, but notice here, it says it does not have any legal tender status. So they are not treating it as legal tender. It doesn't have the same as the US dollar. Therefore, as we kind of scroll down here, it's going to kind of say exactly how it should be treated. We scroll down all of this, and here it is. And I guess you could say Notice 2014-21 is very, and in most simplistic nature, a Q&A, because you have questions and you have answers. And the first question is, how is it treated for tax purposes? And they say, well, for federal tax purposes, it is treated as property. So, and that's exactly how we have to deal with Bitcoin and all cryptocurrencies, as if you received it as property. It's the same as buying a car, buying a computer, buying your cell phone. And this, like I said, goes on 6 pages and 6 pages on about everything, what to do when you mine it. So real something good to read if you're very interested in taxation and Bitcoins. But just looking at Notice 2014, the 2 things that I really want to focus on, and the fact that it is not designated as legal tender and they treat it as property. That is the main 2 things that we're going to use as, or that I'm going to use as a basis to go ahead and break down how you deal with the taxation of Bitcoin and taxes. All right. So let's go ahead and get back to the slides here. Okay. So now that we know how the IRS views and treats Bitcoins and cryptocurrencies, the next question I'm going to attempt to answer is, how is Bitcoin and cryptocurrency taxed? And the answer to that question is, it all depends on how it was acquired. Because remember, they treat it as property, and depending on how property was acquired, that determines the tax treatment of such. Now, even though there are a bunch of ways to acquire Bitcoin, I'm going to focus on the 3 primary ways that you can acquire Bitcoin. And the first one is you can purchase it. Second one is you can pay for, or not pay for, you can receive it as a payment, meaning that you can be paid via Bitcoin or paid using Bitcoin. And the third one is if you are mining Bitcoin. So just to recap, you can acquire Bitcoin through purchasing it, receiving it as a payment, or you can mine Bitcoin. All right. So let's go ahead and view the taxation of each. Now that we know the three primary ways to acquire the crypto, let me go through and break down how each is taxed based on the IRS treating it as property. Dealing with the first one, purchasing it. So when it comes to purchasing Bitcoins and other cryptocurrencies, that's going to lead us into a brief discussion into what's known as the capital gains tax. And just let me give you an example, or a real simple example of what I mean when it comes to capital gains tax. Let's say, for example, you purchased something for $10. Then later you sold it for $100. That in turn would mean that you have a capital gain of $90. That is the most simplistic example of how capital gains work. Okay, you purchase something for one amount, sell it for another amount, and the difference between the two is what's considered to be capital gain. Now, just in case you are curious, it can work the same way in reverse. Let's say, for example, you purchased an item for $100 and then later sold it for $10. Well, in that case, you would end up with what we call a capital loss of $90. Yes. So it can work in the opposite way, but capital loss is something that we are not going to get into today. Not definitely about to go down another rabbit hole inside of another rabbit hole dealing with capital losses. If you have any questions, make sure to let me know and we can talk about that separately. So let's go ahead and move on. The whole reason we had to have a discussion about capital gains tax is because of the special tax rate that capital gains receives. Meaning that if you have long-term capital gains, your tax on those capital gains will be taxed only at specific tax rates, regardless of what your marginal tax rate would be. And those special tax rates are solely based on your income tax bracket. So depending on your income and the tax bracket that you fall into, that will determine the special tax rate. But let me show you what they are. So if your marginal tax rate is between 10 and 12%, then the amount of tax you pay on capital gains is going to be zero. Yes, I said zero. Again, I repeat, if you have marginal tax bracket, or if your income tax puts you in a marginal tax bracket of 10 and 12%, then you will pay zero tax on anything that's considered a capital gain. Okay, now let me clarify this and make this real clear, because I don't want you to get too excited running around telling people that your uncle, cousin Tyrone said that I can pay zero tax as long as I have capital gains. That's not what I'm saying. Understand me, that this special 0% tax rate only applies to your long-term capital gains. All of your other income and all of your other type of gross income and everything else that you have is still going to be taxed at your marginal tax rate. The only thing that this 0% applies to is long-term capital gains. Okay, so don't get too excited there. Now, there is some strategies to go along with that, but right now, just understand 0%, long-term capital gains only. All other income is taxed regularly. All right. So the next one, if your tax bracket is between the 22 and 35% marginal tax bracket, then you're only going to pay 15% on your long-term capital gains. Okay. So again, that's if you have your income or your marginal tax bracket is between the 22 and 35% tax bracket, then you'll pay a maximum of 15% on your long-term capital gains. And finally, if your income puts you in the maximum marginal tax bracket of 37%, the highest one that we have, then you'll only pay 20% on your long-term capital gains. That's why it's important to know that when you purchase Bitcoin and cryptocurrencies, you are eligible for this special treatment. So therefore, keep that in mind. Okay, so you may have noticed me mentioning the term long-term capital gains as I mentioned that. And the reason that is extremely important and specific to note is because only long-term capital gains get that special tax treatment. Short-term capital gains do not qualify for the special tax treatment. Anything that's considered a short-term capital gain is going to be taxed at your normal marginal tax rate. So, for example, if you have a short-term capital gain and your tax bracket is 25%, then all the gain is going to be taxed at 25%, not the 15% that if it was long-term. So you can see having it long-term definitely helps save some money. Okay, so now you're thinking, well, Uncle TG, what's considered long-term? And that is an excellent question to ask, and I'm glad you asked it, because in order to be considered long-term, it has to be held for more than 12 months. Keyword to focus on here is more than 12 months, meaning 12 months and a day. Okay, not exactly 12 months. I mean, be on the safe side. Do it for 12 months and a week, because even if it's held for 12 months exactly, meaning if you purchased it on January 1st and you disposed of it on December 31st, exactly 12 months, that is still considered short term. And remember, short term, no special treatment. Long term, very good treatment. So more than 12 months. So for those of you who are purchasing it one day, turning around and selling it for another day because you're just taking advantage of the price drop and as the market is volatile, whatever, if it's not held for more than 12 months, it's considered short term and it's just going to be taxed at your regular rate. Okay, so definitely keep that in mind. All right, so still continuing our conversations into capital gains and understanding what happens when you purchase it, there is something very important for you to keep track of when you are purchasing Bitcoin and cryptocurrency, and that is called basis. Basis is the amount that you paid for it plus any other costs associated with the acquisition. Let me give you an example. Looking back at our example, the basis here is the $10. Why? Because that's the amount that we paid for it. If there was any other cost associated with that purchase, you would then add that to the basis. And let me give you another example. Let's say you didn't necessarily purchase it directly, but you traded $1,000 worth of Ripple for one Bitcoin. So as you did a coin to coin transaction or multiple coins for one coin, it doesn't matter. But let's say whatever the value of what you traded was $1,000. Like in this example, $1,000 of Ripple for one Bitcoin. The basis of the new Bitcoin that you just required is going to be the $1,000 that you just traded for it. Okay. So basis is the key. How much did you pay for it? That is going to be help you determine whether you have a gain or a loss. Okay. All righty. So there we have it. Let's go ahead and recap what happens when you purchase, meaning you take money out of your pocket, you spend it, and in exchange, you acquire Bitcoin and cryptocurrency. The most important thing to know is one, keep track of your basis. Know how much you paid for it. Know, was there any additional cost for the acquisition? Keep track of that. Okay. Second thing to note is whether you want to keep it long term or short term. Remember, Long term gets the preferable tax treatment. Short term gets whatever, it gets taxed at whatever rate that you're already taxed at. Long term, 12 months and a day. That extra day, that extra 24 hours, that counts. Me, be on the safe side, keep it for 12 months and a week if you can. I'm just saying, that's just me. That's just advice from your uncle cousin, okay? All right, so let's explore the next one. Payment. Let's talk about what happens when you acquire Bitcoin as a payment. So the best reference as a tax professional, as a teacher of taxes, I love showing this video with my student because it really brings it home. And now I am going to share one of my favorite videos or commercial for that moment with you so you can kind of get an idea. I apologize in advance for the choppiness of this video. I tried to look for the clearest version possible and just could not find it. But let's go ahead and get to it. Here it is, my favorite video or commercial from Trident.
Hey,
Mr. Jones.
would you mind if I paid you in gum?
That's me, Trident Layers. Gum with layers of flavors. Of course you can pay me in gum.
I'd be crazy not to get paid in Trident Layers.
We weren't allowed to. Delicious strawberry.
With tasty citrus.
I love Trident Layers.
Yeah.
No one ever pays me in gum.
Man, I love that commercial. As a tax professional, as a teacher of taxes, I show all my students that. Why? Because it really brings home an important fact. You can be paid for your services and products using anything, even gum. Yes, you can be paid in gum. It's property. The only thing is we just have to figure out what to do with it once we receive it as payment. Because remember, we didn't always have greenbacks. We didn't already have the Benjamin. We did not already have the Benjamin Franklins and all these crispy $100 bills, 20s and all that. There was a point in time where people were paid in salt. Yes, not that long ago, salt was a commodity. So here's the deal. When you are paid in Bitcoin or any other type of cryptocurrency for your product or services or for your time spent as an employee, you must include that amount in your gross income, meaning that you must include that amount somewhere on your income taxes as income. And where you put that on your taxes depends on how you received it. If you received it as an employee, then it's going to be reported as wages, meaning that your employer is going to be responsible for tax withholding on it, both federal, Social Security, and Medicare, and any state taxes that's applicable to it as well. Again, if you receive it as an employee, it gets reported as wages and taxes are going to be withheld on that. If you receive it as an independent contractor, blogger, vlogger, or something like that, you're going to report it on a Schedule C as self-employment income. And like wages, you're still going to be responsible for the taxes, except the self-employment income, you're now going to be responsible for self-employment taxes and all of the laws and rules and regulations that apply with self-employment taxes that you have to pay on the net income. And if you just so happen to receive a Bitcoin in exchange for something that you did, but not in the capacity as an employee or a self-employed individual, then it's going to be considered to be received as a hobby. And if it's received as a hobby, the value of it, you just add it to your gross income under other income on your 1040. Now comes the question. So seeing that you can actually be paid with Bitcoin and the U.S. doesn't consider it to be legal tender, well, how do you give it a value? And that's an excellent question. And the answer to that is by determining the FMV, or as what is known as being short for fair market value. Now, fair market value is determined on the date in which you received it. Stated another way, what was it worth on the day that it was given to you? And if you don't know it, or if you received it and you're just now seeing this video and you wasn't aware of this and you need to go back and research and find out what the value was in that day, you can go to places like Yahoo Finance, type in that particular cryptocurrency on that day, and it should give you historical data. You can also go to places like coinmarketcap.com, coindesk.com, and bitcoin.com. I'll make sure that I put links to all of these places down in the description below so you can go there, simply type in the currency, go down, and it's going to give you what's called historical data, and you can type in a date range and you can get the fair market value, or what it was valued at that particular day when you acquired it. And that is going to be the amount that you are going to include in your gross income. All right. And that's it for when you purchase Bitcoin. So let's just go ahead and recap real quick. Okay. I can't talk again today. So the thing to really take home is when you are paid with Bitcoin or any other type of cryptocurrency, the main things that you want to keep in mind, one is the value of the fair market value of the actual Bitcoin or cryptocurrency on the date that you received it. Note that you are going to have to add it to gross income. Now, how is tax? It's going to be determined on which capacity you received it. If you received it as wages, well, your employer or the person who paid you in wages technically has the responsibility of doing all the federal tax obligations. That should be on them. But just in case, still be prepared to know that you're going to have to pay tax on it. Make sure you know the fair market value of it, that nobody's inflating that price or deflating the price. Do your own, keep your own records, do your own research, know the value of it on the day that you received it as payment. If you received it in the capacity of self-employment, still know the value of it on the date that you received it, because that's the amount you're going to start with as far as gross income. And then as you go through, like any other self-employed or freelancer, subtract out your expenses or what you did to acquire, and what you're left with, the net income, that's the amount that you're going to have to pay the self-employment taxes on. If you're doing it as a hobby, meaning you just casually acquired it, somebody said, you know what, thank you, here's a Bitcoin. It's not something that you're actively pursuing. You're not in that capacity of trying to be paid as an employee, a self-employed tax person. If it's a hobby, you still have to know the fair market value of it. You still have to report it in gross income. The only thing is, as a hobby, whatever expenses that were used to acquire that Bitcoin, you won't really be able to deduct it. So keep that in mind as well. All right. So let's go ahead and move on to the next one. Or is it that way? Mining. Now let's talk about what happens when you acquire Bitcoins and cryptocurrencies through the process of actually mining it. As a miner of Bitcoin, you are in a 50 shades of gray type of area. Wait, no. Okay, scratch that from your mind. Not 50 shades of gray. You're just in a gray area, meaning that you're in a twilight zone or some weird type of limbo area as a miner. And the reason I say that is because how you're taxed on the Bitcoin you receive, it kind of really boils down to why you're mining in the first place. Now, I can say this. As a miner, you really can't say that you purchased Bitcoin. And truthfully speaking, you probably wouldn't want to go the route as a purchaser anyway, because if you say that you purchased the Bitcoin, well, you really wouldn't be able to write off all that fancy equipment, all of the mining equipment it takes to actually get Bitcoin. And another reason I say you really can't say that you purchased Bitcoin, because technically you didn't come out of pocket and exchange, U.S. legal tender or greenbacks for it. So you really can't say that you purchased it. So therefore, it is my humble opinion that miners only have two options. That is to be having your income taxed as hobby income, or have your efforts for mining being taxed as self-employment income? And this is where it gets tricky for miners. See, if you're just casually mining and just happen to get Bitcoin, then the IRS is going to perceive that as a hobby. And as I just stated earlier, if it's perceived as a hobby, you possibly may lose the ability to deduct any and all expenses, meaning your equipment, utilities, and things like that, that comes along with actually mining the Bitcoin and cryptocurrencies. So, of course, the route you want to take, and again, this is my opinion for those who are mining, in my opinion, the route you want to take is that of self-employment. But here's where, again, that limbo comes in, because as a miner, you're not really getting paid using Bitcoin. It's kind of like a luck of the draw type thing. So you may not get a Bitcoin every time that you do what you're supposed to do as a miner, and therefore it can kind of be perceived as a hobby. And again, here's where it gets tricky, because as a miner, yes, you do technically have a job to do, in the sense that you are going through verifying transactions, making sure that everything is okay. It's like, in essence, you are a crypto bookkeeper in a sense, right? So you're going through, you're making sure that everything is okay. But the problem is you're not getting paid for every single transaction that you verify. You actually have to go through and get lucky enough to guess the hex code and be the first to do it, and then you'll get rewarded a Bitcoin. And if everybody's doing it and everybody is up to date and their technology is faster than yours, you may not be awarded every single time you do your job. So because of that inconsistency of actually getting paid as a miner, that's where the perception of, is it really self-employment or is it a hobby, comes in. Now, that's not to say that you absolutely cannot act in the capacity of the self-employed. I'm encouraging that if you are mining and this is something you are doing to actually get economic gain, I'm encouraging you to act in the capacity of self-employed. But I'm also warning you, just be prepared to prove to the IRS that it is not a hobby and that it actually is a self-employed job, because you want to be able to write off all of the costs of that equipment. And trust me, running that equipment is going to run up your utility bill, so you want to be able to deduct that as well. Everything associated with mining Bitcoin, you want to be able to write off. So I'm suggesting do it in the capacity of self-employed. Just be prepared to prove it. And when it comes to proof, or when it comes to substantiation to help prove that you're actually in it for business purposes and not a hobby, the IRS has issued 9 profit factors, something that they compare the activities to, these 9 factors, to ensure that it is in fact a business and not a hobby. And no worries, your favorite uncle cousin have you covered. I have created a video series just for you that explains these 9 profit factors in details. Again, I'll make sure that I put a link in the bottom of this video. I'll make sure I put that first, so you can go ahead and just click on that and get access to the videos, hobby versus business, so you'll have an understanding. And as long as you have those 9 profit factors somehow, some way embedded in your process of mining, you'll be okay. However, in either case, whether you're going to use the self-employed method or the hobby method, you are still going to have to determine the fair market value of the Bitcoin so you can include it in your gross income. And when you're trying to do it for long term, and especially if you're mining, because you're not guaranteed to get a Bitcoin for every transaction that you validate and verify and be the first to get to the hex code, you are going to definitely keep track of the fair market value of each date. And let me give you an example. Let's say, for example, on these days, you actually got lucky and mined a coin. And at the time of those dates, the fair market value was such. So let's say on January 14th, you got lucky, mined a coin and it was valued at $1,000. January 30th, you got lucky again, mined a coin and it was valued at $1,500. But you know, you've been mining and trying, and you didn't get lucky again until October 20th, and the value of that Bitcoin was at $3,000. And then you got lucky again soon after on November 19th, and the value of that Bitcoin was $2,500. Well, and that was it. So throughout your whole time of mining, you got lucky 4 times. And so what you're going to include as the gross income is the grand total of $8,000. That is, like I said, the grand total of all the fair market values of the Bitcoins that you mine through that year. That is your starting point. All right. All right. So here we are, the end of the miners section of Bitcoin. Time for our recap of this section here. Real simple. As a miner, you must choose in which capacity are you going to report the income. If you're choosing it as a hobby, then determine the fair market value on that day, add it to your 1040 as hobby income. If you're going to choose to do it in the capacity of a self-employed individual, same thing. Make sure you have the fair market value of all of the coins or the single coin that you acquired through the mining process. Include that on your gross income of your Schedule C of the 1040. Make sure to deduct all of your expenses and anything that it cost you to acquire those coins. And that is how you do it. All right, family, and that is it when it comes to Bitcoins and cryptocurrencies and taxation. Remember, 3 possible ways of acquiring it. Either you buy it with your own money, you get paid for it in the form of Bitcoin and cryptocurrency, or you get it as a miner. And depending on which one you choose, you know what needs to be done. If any questions, make sure you go back and review it again, especially the part with the capital gains, the purchasing it, the mining it, make sure all that's understood. But now that we've come to the end of the video, let me give you some words of caution. Bitcoin was created to foster peer-to-peer transaction in efforts to eliminate transaction fees and unnecessary restrictions, right? What Bitcoin was not created was to foster an environment of tax evasion. So if you are getting into Bitcoin for purposes of trying to avoid paying taxes, I beg of you, I encourage you to change your frame of mind, change your mindset, really try to get out of that, oh, I'm about to get Bitcoin so I don't have to pay taxes thing. That's considered tax evasion, and it is illegal and punishable by law. And trust me, I have heard it all, okay? I've heard, well, you can purchase a house using Bitcoin and you don't have to report that. I'm like, okay, let's consider this. Yes, you may be able to purchase a house using Bitcoin or purchase any other type of car or property using Bitcoin. But keep in mind, you're still going to have to register that house with the county clerk because the deed is on property. You're still going to have to pay property taxes. And if your state is anything like the state of California, they know when property has been transferred to a new owner, so they know who to tax. I've personally seen letters where California has said, hey, we noticed that you're paying property tax, but we don't have an income tax form for you. So we are going to reverse engineer the amount that you owe us based on the value of the property there. And so how are you going to explain that? Yes, there may be ways that's undetectable now, but the government is going to always find a way. And I'm just saying, I have heard things that have made me cringe. And I had to be like, you know what? Yeah, I don't want no involvement in that. So excuse me. Don't try to be slick. Don't get yourself in trouble. Know how cryptocurrency works. Know how it's taxed. Prepare for it. Strategize for it. Set up your future to be successful, and you don't have to worry about none coming to bite you in the butt a little later. And that is my advice from your favorite uncle cousin. Why? Because I love you and I appreciate you being here. Alrighty, family, there you have it. The end of our discussion into cryptocurrency and taxation. As always, if you have any questions, make sure that you leave a comment below. Make sure that you subscribe to the channel if you are new here. If you are watching this video and you already subscribed, man, I love you so very much. I appreciate the support. I'm having fun with you. Thank you. As always, if you need to reach me, find me on my social media channels. You can find me on Twitter at this handle. You can find me on Facebook here. Speaking of Facebook, make sure that you go like the new page that I just created, the Self-Employed Tax Guy. That's where I am going to be doing or housing a lot of the information, posts, updates. So if you haven't went over there and liked the page, make sure you go over there and like the page, the Self-Employed Tax Guy. You can also inbox me if you want to ask me something privately. Go there, do so. If you want to get a geeky, sneaky peek into what I do personally in my personal life, make sure you go follow me on Instagram at the Self-Employed Tax Guy. And yeah, that's it. Any questions? Like I said, get in contact with me any one of them ways, guys. Subscribe, share the video, and I will see you on the next one. Love you.